Hello everyone, how's it going? Another day and another trading session with Palantir at around 21. So, is Palantir going to 100 next or 10? Are you going to make or lose banks on this trade, and what is the market mood towards it as we go in summer? Hello everyone, I hope that you had an amazing day and a very profitable trade in the market. In this video, we're going to talk about Palantir and see if it is a stock for you. So, as we know, over the past few years, things haven't been always, looking on the up and up. In fact, the market, especially the job market, has gone through a lot of ups and downs, and companies that were once considered as great places to go and, maybe retire at, are now reducing their workforces and cutting entire departments at times. So, for many people, that has kind of shattered their assumptions about this world. Probably a blessing in disguise, if you ask me, but, traumatizing nonetheless. The inflation, on the other hand, has been rapidly increasing and eating away people's savings in economies that used to be deflationary. So, when every source of certainty is about to melt, we must use that opportunity to remember that we need to take a step back and to start working about our own financial independence. And in order to secure this financial future, we have to find the growth opportunities in an ocean of bearishness and uncertainties so that we can seize the ones that can multiply our capital exponentially and increase the money available for later investments. Essentially, we need to find a golden goose. And in my opinion, Palantir is one of those. So over the years, it became a lot more than just yet another tech stock collecting funds in exchange of empty promises. It became a major player listed on a Nasdaq, and it is a bit the canary down the coal mine as far as the market mood is concerned. It has a lot of clout, mystery, and I would say well positioned in a market to arouse its curiosity, and we have seen that it has the capacity to capitalize on people's tendency to follow trends. It is a company that would often be viewed as the risk appetite of the market alongside Tesla or Apple. I mean, the fact that Palantir may rise and fall with the tidal waves of risk capital is a limited but useful prediction tool that makes a very good stock to follow on the market, to see what is the market's opinion, or rather sentiment, about taking risks, the very idea of risking your money. So in this video, we're going to take a deep dive into Palantir and to see whether it deserves to have a place in your portfolio. Now, before the video begins, I just want to take a moment to appreciate every single one of you for coming in. So thank you for coming in, and I hope that you're going to enjoy your stay and that you're going to come back for more. If you like what you see, please consider to like, subscribe, and to check out my channel for playlists of other companies I cover. With that being said, I hope you're going to enjoy my analysis, and let's get started. So right now, the price action tends to push a little bit towards like the $20 level with additional pressure from active like short sellers because of the recent attempts over the past few days to push it downwards, but these attempts have so far failed at around $21, probably because there are many traders who, of course, when it reached 25, they wanted to take their profits, but it doesn't mean that the market is also willing to go down 20, because going below 20, it means that a lot of people are willing to make the potential profit between 20 and $0, whereas their risk is between 20 and the infinite. So I believe that the confidence may be, picking somewhat back up as the retail demand is concerned. So the recent consensus is that the sell-off pressure continues to go on, but we might have seen, and this is a bit of a mouthful, the peak of, I would say, like the sell-off efforts. So there are, of course, additional volatilities to be expected as we go into summer, meaning the trading volume is relatively light, and we're going to see some S&P 500 rebalancing in June as well. Many saw those developments and used these opportunities to take profits from their current position with the expectation that the price action will first correct and then come back for a better price. In other words, they want to, dump it now and come back later. The market reacted, of course, and is currently in the process of looking for the beginning of the new phase of consolidation. It's interesting to remember that, despite all these attempts to push it downward, so far the stock did not go below $20, which does suggest that that bottom might hold a lot more reliably for the time being. And of course, it doesn't mean that just with that aspect alone, we're going to have a massive recovery. In fact, the market might just be consolidating and looking for the next direction. It's useful to remember that Palantir is a stock made of momentum and a large dose of anticipation instead of cash flows and financial results. In fact, if we were just looking at cash flows and financial results, maybe the stock would still be worth investing, but just not with the same kind of investors. Like if we're in Palantir right now, let's be honest, if we're in Palantir right now, it's not because of its cash flows. It's not because it has like positive profit margins, although that massively helps. Okay. In fact, this is one of the aspects that Palantir has that makes it head and shoulder above many other companies, many of which are, or might be its competitors even. So why is that the case? Because remember I said, Palantir, unlike many other corporations, is not a company that, how can I put it, that scams your money for empty promises. Like it's not going to tell you that whatever random sector it's in is going to make you boatloads of money in like the millennium to come. And by the way, just give me your retirement money. Okay, just give me your just refinance your house so that I can keep my ship afloat. That's not what Palantir is about. Palantir has always been mostly able to cover their own needs in terms of cash flows. And since 2022, right, their profit margins, and maybe even before that, the profit margins, at least the gross margins, were accurate. And this is something that's very important because we got to remember that a company is defined by its capacity to stand on its own 2 feet in the long run. Yeah, of course, there's the dream, there's the PowerPoint presentations, there's the eccentric attitude of their CEOs, but ultimately, it really comes down to numbers. Now, for Palantir, it's not just these numbers that matter, right? But they also kind of matter. And we're gonna talk in a second about the role of media, or the relevance of media rather, in this game. But let's just say that yes, it has its relevancies, but it's the kind of relevancies that you can use as a tool. It's a bit like, when you look at political surveys about who's going to win the next elections, they shouldn't be used as, how can I put this? They shouldn't be used as like, they shouldn't be used as a crystal ball. In fact, crystal balls should not be used as crystal balls. Okay, if you watch any of her shows, you're probably doing yourself a disservice. But anyway, but you see, they can be used as tools to analyze the momentums at play. What's the current movement, right? Who is gaining momentum? Who is gaining increasing amount of clout on who else? So that's the kind of thing that we need to look at in news cycles. In fact, if you think about it, and that was pretty weird to think about, and a pretty painful memory as well, despite the fact that I was not heavily involved in the Palantir, like I did not have a major part of my portfolio in Palantir. I don't know if you guys remember that, like, especially the people who have been watching my channel for some years now. There used to be a guy who every time I post a Palantir video, he would post below Palantir to the win, or no, sorry, Palantir for the win, or Palantir to the moon, like under every single one of my videos. I hope that this gentleman or this lady is doing fine, and that, plenty of very profitable trades have followed. But basically, what I'm getting at is sometimes we do this kind of stuff not just because we believe in the company. It's because maybe we want to believe in the company. You see what I'm saying? Like, sometimes maybe we hope that we're right. Okay? Are we right? Maybe, maybe not. But do we hope that we're right? Oh, we absolutely have to be right, because if we're not right, we're kind of screwed. Okay? So this is also the kind of situation that we're looking at here. Or I don't know if you guys remember, back then there was a company, I can't even remember the name anymore, like Genius Brands. Yeah, I think that's the name, GNUS. There were people who bought it when it reached like double digits back in 2020. And they were really worried when they were watching the video that I was covering. Now, does it mean that, we should just laugh at them? Of course not. But this should serve us as a, how can I put this? It should be like something to warn us. We should not do this kind of thing, right? We should not have this kind of exposure into a stock that we don't actually believe that much in. Okay. What was I gonna say? So this was about like Palantir, but back then, when Palantir fell from like $35 down to $22, some of you might remember the news coverage back at that time was extremely poor, like extremely poor. Everything they do sucks. Basically, everything they say is wrong. Every number that they publish is, the sign that they're heading towards another catastrophe. Like, it was that kind of stuff. And like, despite the fact that I said that, they're having good numbers, right? The company doesn't suck as much as the news painted to be. It didn't work. Palantir was trading well below $10 for quite a while, and no matter how much I felt that it was just wrong, it felt wrong that Palantir was, was that criticized, that people didn't like it to that point. And it just so happens that the market in those kinds of situations are pure psychology, meaning, like, people didn't believe it until they do, right? Much like people would, like the other way around would be, people would like a stock until they don't anymore. This is something, in fact, that is quite often the case with companies that have a large retail shareholder base. They're gonna ape in, and then they're gonna panic sell. Okay. Of course, we don't want to do that, but we can't just say, okay, we don't want to do this in order to not do it. We need to be able to, how can I put this? We need to be able to control our own patterns and to control like who we are, basically, in order to realize that this sort of mental state. Okay. It doesn't mean that you're going to guarantee to make money. It just means that you're less likely to lose a whole bunch in the expectation that you're going to win a whole bunch as well. It's that sort of thing that we need to consider. Now, with that being said, like, so back to 2022, sometimes I bought, Palantir shares here and there because I wanted to average in as low as possible. Of course, I did not buy at the bottom of that bearish trend. I bought at around like $7, and it just felt weird to say stuff like, you know what, this company is better than what we give credit for. Um, you know, Look at their numbers; they have positive gross margin. It just felt weird. Like, regardless of how right things turn out to be, it just sometimes it's bizarre. Okay, it's bizarre that we have this kind of situation on our hands until it went right. Until everybody who bought below $10 were like, oh, you know what, we're geniuses. Okay, we have like 50,000 black screens in our dark trading room, and the matrix numbers just give us the trade secrets or whatever. And the truth of the matter is, sometimes we need to be able to tough out the harsher trading conditions, and we have to operate in very ambiguous circumstances, meaning we don't know if we're right. We might be, or we might be wrong, but it's going to feel very wrong for a prolonged period of time. This is maybe a longer tangent than what I initially anticipated it to be. But basically, the reason I want to say this is because, you're watching this video because you're interested in Palantir, because you want to buy a lot of Palantir shares, because you want to make money from it, right? Because you want to anticipate when the demand will just pop and then Palantir goes to the moon. I'm just saying that sometimes the best moment to buy is when people are really panicking, or the best moment to buy is when it seems the dullest. Okay, that might be the darkest hour. However, I personally don't necessarily believe that. I believe that any time can be pretty dull. Okay, any time can be pretty dark. It just kind of depends on what is our risk tolerance, because for many people, the fact that Palantir was trading below $10 was a good opportunity, myself included. For others, it was absolute hell. There was a question of buying pattern. There was also a question of expectation. So a lot of people were actually expecting Palantir to go to $50 or even $100 in the short term, right? Is that really like realistic? Is that really something that we should actually be hoping for? Maybe, or maybe not. Okay, or maybe not. And personally, I would say that having a disciplined approach in purchasing, and also having a disciplined approach in our own expectation, meaning we gotta keep a short leash on ourselves to a certain extent, will help us to go through like the tougher times. So right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk-return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far-reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So, this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. So, having said all this, my opinion on Palantir is that it kind of depends on what is your ultimate goal. And I'm not talking about stuff as vague as saying, oh, like, I want to make money. Yeah, of course. We're all here to make money. We're not charities. Nobody is. So, even the charities, by the way. But if we want to make money, we should be in for the long run. That is my honest opinion. There are plays that in the short term, like they would only exist in the short term, but there are also trades that should be put into the longer run. And the longer it is, the better. And here's the reason why. Because ultimately, we would live on for decades, at least, right? For some of us, even centuries. This would mean that whenever we trade, we gotta think about our portfolio in the next, at least the next year or even sometimes the next decade. Because yes, we're gonna see that day. And, for some of you listening, a decade kind of passes through quicker than we think. Okay? So, with that being said, personally, I feel like if you want to buy in Palantir, you should definitely buy the hold or buy the invest and not really buy the trade. Palantir is not really a stock that you should be trading with, even if, given its shareholder base, it shouldn't surprise me if a lot of people still do this. But that's just the nature of the beast, and we must make do with it. And also to keep like a pretty disciplined purchase approach. So I would recommend to keep it at between 8 to 10% of your portfolio and to hold it between 12 to 24 months at least, and longer if you can afford it. In fact, if your exposure is 8 to 10%, you almost for sure should be able to hold it for longer than 24 months, because this shouldn't be a huge portion. This shouldn't be like a deal breaker for your portfolio. So this is why I believe that if you put in 8 to 10% of your portfolio's money in Palantir over the course of the next 6 months, let's say, or even 12 months, in fact, that would be the best approach to purchase Palantir.